Treasury bills are short-term government securities. Treasury bonds are short-term to long-term government securities. What do I mean by that? Both treasury bills and treasury bonds are investments with the government. They are low risk, high returns. They are low risk investments with the government. You lend the government money so that the government can use the money that you have lent it to run or to meet its short-term to long-term budgetary allocations. And in return to you lending the government money, the government will pay you back some interest. In this video, I am going to take you through the treasury bills and treasury bonds side by side. I know I have already done a video on T-bonds and I have already done a video on treasury bills, but I haven't brought them close together so that you can easily see the similarities and the differences to enable you make a clear decision or wise decision or more informed decision as to whether to pick the treasury bonds or to go for the treasury bills. My name is Berlin. Kindly press the subscribe button for me and press the notification bell so that whenever I upload a video, YouTube can notify you. To those who have already subscribed to the channel, thank you so much and karibu. Welcome back to this session. Now, what are the similarities between treasury bills and treasury bonds? There are a number of similarities. First and foremost, both treasury bills and treasury bonds are investments with the government. So that means that they are low-risk investments. They are low-risk investments. Low risk means that possibilities or chances of you losing out your money is almost negligible. Okay? Now, for you to invest in the treasury bill or a treasury bond, you must have a CDSC account. Now, this is another similarity. You must have a CDSC account. And how do you have or where do you get this CDSC account from? You need to open one with CBK. For you to open a CDSC account with CBK, you can either physically visit CBK, any of their branches in the country, and have the account opened, or you can open the account online through their CSD accounts. Both treasury bills and treasury bonds have what you call competitive bidding. What do I mean by that? Whenever a treasury bill or a treasury bond has been floated, or whenever the CBK is selling either a bill or a bond, you can either bid competitively or non-competitively. And in both cases, the benchmark is 2 million. If you want to invest an amount which is in excess of 2 million with the government, you have an option to dictate the price at which you expect CBK to pay you interest on. That means that when you are bidding or investing less than 2 million, then you don't have that option. You don't bid competitively. CBK will pay you at the rate, at an average rate, which CBK will determine. This is both for treasury bills and treasury bonds. That's another similarity. Competitive bidding. The limit is 2 million. You can dictate a price at which you expect CBK to pay you at, and then it will be at CBK's sole discretion to either accept your offer price, interest rate, or decline it. What are the differences? How do you differentiate a treasury bill and a treasury bond? Now, treasury bills are sold or are auctioned weekly, meaning that every week you can buy a treasury bill. Every week you can invest in a treasury bill. Treasury bonds, on the other hand, are auctioned monthly, once every month. There are certain months though that CBK, after auctioning, will reopen that paper. What do I mean by that? CBK will auction the treasury bond, and then after they have received the bids, people have made payments depending on its expectations. If, for instance, it was expecting to collect 60 or 30 billion from the market or from the public, and it only got maybe 24 billion, it can reopen that paper so that people who are locked out of that paper can bid again and give the government more money. So bills are auctioned weekly, bonds are auctioned monthly. Another difference between treasury bills and treasury bonds is in the interest that is paid. Bills, is in the tax. Bills are taxed at, treasury bills are taxed at 15%. Treasury bonds, on the other hand, are taxed either at 15% or 10% or 0. The infrastructure bonds are not taxed. They are tax exempt. They are tax free. So treasury bills are all taxed at 15%. Treasury bonds are either taxed at 15%, 10%, or no tax at all for the infrastructure bonds. The treasury bonds which are taxed at 10% are the long-term papers. The long-term papers, which are bonds which have a maturity beyond 10 years. The bonds which have a maturity of 1 to 10 years are taxed at 10%. And that brings us to another difference of bonds and bills. That is the tenor or the maturity period. Treasury bills are short-term papers. So they have maturity periods of 3 months, 6 months, and 1 year. Treasury bills have maturity periods of 3 months, 6 months, and 1 year. Treasury bonds, on the other hand, have maturities. The maturities differ. It ranges between 2 years and as long as 30 years. All right? Another difference between treasury bills and treasury bonds is the interest payments. Interest on treasury bills are paid at the beginning. What I mean by that? Treasury bills are sold at a discount. At a discount, meaning that if you are investing 100,000 shillings at a specific rate, you will remit to CBK 100,000 less the interest which CBK will be paying you for the duration which you'll be investing it at. For instance, if you're investing 100,000 at 16% or say at 14% less of taxes, yeah? For a period of 6 months, 14% of 100,000 is 14,000 shillings. Prorated to 6 months, it's 7,000 shillings. So when you're remitting your money to CBK, instead of remitting 100,000, which is your investment amount, you will send to CBK 93,000 shillings. So treasury bills are sold at a discount. At the end of the 6 months, CBK will send you 100,000 shillings, which is your investment amount. Treasury bills are sold at a discount. Treasury bonds, on the other hand, are sold at par, especially the new papers. At par means if you're investing 100,000, you will send to CBK 100,000. But CBK will pay you interest every 6 months. Remember, in bills, you retain the interest and then you send to CBK the difference. Instead of sending 100,000, we send to CBK 93,000. If you're investing 100,000 shillings in treasury bonds at a net interest, meaning less of taxes, of 14%, you will send to CBK 100,000 shillings. Now not 93, 100,000 shillings. And then at the end of 6 months, CBK will pay you 3,500 shillings. How did I get that figure? It is the 14%. And then because interest is paid, at 14%, CBK will send you 7,000 shillings. How did I get that? It's at 14%. Interest is paid every 6 months. So every 6 months, CBK will be paying you 7,000 shillings. So that at the end of the year, you would have received your 14%, which is 14,000 shillings. Bonds can also be sold at a discount or at a premium. At a discount, like I have already explained, if you're investing 100,000 shillings, you could sell to CBK 98,000 or 93,000. Okay, I have explained why CBK does at a discount, how the discount will come about or the premium will come about in my video for decoding treasury bonds. I'm going to place that link in the comment section so that you can have a look at it. Another difference or distinction between treasury bills and treasury bond is the minimum investment amount. For treasury bills, you need to have at least 100,000 shillings. However, for treasury bonds, you need to have a minimum of 50,000 shillings. All right? I have already told you that there's a similarity in how interest is paid. For treasury bills, interest is paid upfront. For treasury bonds, interest is paid during the tenure of the bond and it's paid monthly. Not monthly, it's paid semi-annually. Every 6 months, you receive a coupon. I have told you, treasury bills are auctioned weekly. So these are the similarities and the differences or the distinction between treasury bills and treasury bonds. So when you're making a decision or as to whether to buy a bill or a bond, these are what you put into consideration. All right? If you want a place where you can park your money for a short duration of time, maybe 3 months or 4 months, you can go for the treasury bills. However, if you want to invest in for purposes of accumulating or having passive income or for your retirement, then the bonds is what you need to go for. When making your investment, you need to consider the features of these different papers. Yes, they are both government securities. They are both low risk profiles. At the point of auction, the rates are normally more or less the same. The margin difference is never so much. But because once the government has accepted your interest rate, it's not going to change. You can use that to make a decision as to whether you want to lock your money at that rate for a shorter duration of time, treasury bills, or for a longer duration of time, the 30 years, 10 years, 5 years, whichever duration of the treasury bond. Kindly do not forget to subscribe to this channel because I am working on uploading for you more informative videos.